Good morning from Los Angeles. Welcome to Trading with Sergio. Every Monday, 10 a.m. Pacific, 1 p.m. Eastern. A lot going on. A lot. So over the weekend, as we know, we had the tariff deal with China. I have mixed feelings about this. To be honest with you guys, why was all this necessary? I'm not sure, other than it added quite a bit of volatility and shook a lot of people out in the market. But then it seemed like retail was strong buying the dip, and they're benefiting from it today and over the past couple of weeks. I'm going to say, yeah, judgment. I'm going to hold judgment. Let's see how all this works out, because there is now another 90-day clock, although the market's taking it as the tariff wars are over, and it seems like we're on our way to a new all-time high. Although the bond market is not liking it, and I do have a position in the bond market, and interest rates are going up, actually, such as mortgage rates are going up. 10-year note is up, 20-year note is up, 2-year note is up. Gold is down. All the things that were actually working, now they're not working, except we're back at the stock market again. And I have positions, obviously, they're benefiting from what's happening, but specifically in my long-term portfolio, which I got lucky, honestly. I bought 6 different shares, 6 different companies. They were pretty much at their lows, but who knows what the lows would have been. So when it comes to this tariff thing, so on April 2nd, overnight, markets opened sharply lower because joke is over, tariffs are on. Then we got into a pissing race, and I don't know if this was a power play or saying that, look, the world needs us more than we need them. Possibly, but there's other things behind this. I am all for fair trade. We know trade has not been fair, but the reason it has not been fair is because we shipped all our jobs and manufacturing overseas during globalization. And you have to be honest about this. It's unfortunate, but it happened, and millions of jobs have been lost. Although other jobs, service economy jobs, have been created. We became a service economy, or supported by consumer spending, as opposed to manufacturing economy. And that happened over a 20, 30-year period of time. And now we're trying to rebalance everything. I look at this as a rebalance as opposed to anything else. I do agree with what the administration is doing. I think the scope and the size and the speed of it is what the markets are not used to, but the markets are not everything, right? Not everybody's involved in the markets. Is this going to be short-term pain, long-term gain? Well, the short-term pain is not there if you're talking about the markets, but the short-term pain still exists when it comes to the average American. Inflation is still around. Prices are still going up. The dollar is still losing value. Your buying power is still going down. These things are structural. These things don't change overnight. It takes a long time for them to get this messed up, and then it's going to take a long time for it to get fixed. Do I agree with the administration bringing back manufacturing jobs, high-paying, middle-class manufacturing jobs to the U.S.? Absolutely. Will it happen? I doubt it. I'm not pessimistic about it. I think what they're doing is correct. But I'm afraid that we let the horse out of the barn, and unfortunately, now we're trying to put it back, and it's going to be a tough job. But it definitely looks like the administration has a plan. The initial plan was shock and awe, right? Oh, tariffs, 100%, 200%, 150%. My gun's bigger than your gun. And, I get it. I get that. This is the style that this administration does things with. And this is very new to the markets, to the bond market, to everything. But over the weekend, obviously, in Switzerland, they had an agreement that They pulled back the tariffs between China and the U.S. to a 10% level, agreed to talk over the next 90 days to come up with a resolution. China helping with the drugs pouring over the border. I don't know what China has to do with that. The fentanyl problem. I think that's a domestic problem, but then obviously drugs are coming from somewhere. Look, to me, important thing is it seems like cooler heads prevailed. I have done a couple of videos about this. I said hopefully cooler heads will prevail, and we'll be back to the table as opposed to being two kids in a schoolyard saying my dad's bigger than your dad is going to beat you up. I don't think politics or the local economies, our local economy, can be run that way. I also don't think our country's economy can be run like a corporation, although some of you may disagree. This is not Elon Musk walking into Twitter with a kitchen sink and firing 8,000 people. We have 360 million people in this country who need the government. I am not for a large government. I rather do, I think I know what to do with my money than paying taxes and nothing gets done and it's just wasted. I agree with that. I've been agreeing with that. But then, this is not a Republican or a Democrat issue. If you look back, I don't know, decades, going back to the 80s, actually, we are in the situation we are because nobody's watching the house. Washington loves spending the tax dollars we don't have. The budget's blown up, and when you're dealing with a $37 trillion national debt, is that going to be under control or brought under control anytime soon? I doubt it. Where is those IOUs are out there, and we're paying billions and not trillion. Actually, it's over 1.2 trillion in interest last year. This year it's going to be higher, and what is happening is that the bond market is disagreeing with the stock market. Specifically today, yields are going up, stocks are going up. When yields go up, yields are competition to the stocks. At some point, this is going to make a difference. I don't know when, but again, you trade what's in front of you. You buy and sell what's in front of you. The price is the price. You can't disagree with what the market is doing. And so a couple other things this week, after let me just look at this real quick. Okay, so tomorrow we have CPI inflation data, consumer price index inflation data is coming out. I think it's before the market opens, 5:30. Wednesday, OPEC monthly report, nothing burger there. On Thursday, April PPI, producer price index inflation data is coming out. So those two, tomorrow, CPI, Thursday, PPI. Another important item on Thursday is April retail sales. I mean, I'm looking at all the credit card data. I'm looking at all the other data. The consumer is not healthy at the moment. Credit card defaults are actually skyrocketing. And as a consumer society, we have more debt than we ever had. That includes the healing that we went through, lowering our debt, personal debt levels during the pandemic. We saved some money actually during the pandemic, but we're right back to the crack, plastic, and numbers are not looking good. But we'll see. We'll see where that goes. We'll see. That's going to be actually as important as the CPI and PPI data. On Thursday, Fed Chair Powell speaks. We know what's going on between the administration and the Federal Reserve. Trump is saying we need lower interest rates. I don't think it works that way. I mean, and the Fed is saying, no, we'll have a mandate. We'll have 2% inflation, full employment. That's where we need to go. Inflation is nowhere near 2%, although today's bond market reaction is pretty reasonable. Bond market interest rates go down when we're going in a slowdown. Well, now that the tariff deal is done, inflation may not come back or go higher than what it is. And we may not get in a recession or even a slowdown because the recession was going to get priced in pretty soon in the markets. Now the bond market is talking. Bond market saying, okay, none of these things are going to happen. Then we don't need lower interest rates. And Fed Chair Powell has said that many times. Market's behaving exactly the way it should behave. And so we'll see what he says on Thursday. So that's the news, economic news or macro news this week. On the macro side, it is important to understand that since we're a consumer spender society or economy, about 70 to 75% of our gross domestic product (GDP) is consumer spending. Okay. So as far as the numbers are concerned, our GDP last year was close to $28.5 trillion. And imagine that 75% of that is consumer spending. What happens if the consumer doesn't spend? Well, nothing good happens when the consumer doesn't spend in this country. And in order for them to spend, they need to have earnings. But a lot of the consumers are living on credit cards. Okay. And although earnings have gone up in this country, or incomes have gone up in this country over the last 4 or 5 years, they haven't kept pace with inflation. They haven't kept pace with the debasing of the currency. They haven't kept pace with the currency losing value, about 6 or 7% a year, buying power, right? And everything we buy, everything we spend on, from insurances, from schooling, from healthcare, go down to eggs, right? Food, everything we buy has gone up tremendously. And in fact, adjusted to inflation, incomes in this country are down. They're not up. So, at some point, the consumer needs to understand that, and we need to understand that they're going to slow down spending. Well, when they slow down spending and your GDP, 75% is made up of consumer spending, what's going to happen? Those are the tea leaves that I'm trying to read and put together. But, market's the market. Massive move up today, gapped up, holding its gains, probably squeeze some more higher. Look at the charts, but my idea of all this was April 2nd was the day that all this, let's say, tornado started, tariff tornado. And today it seems like tornado is gone now. So, what happened? We're exactly back to maybe a little bit above where we were on April 2nd. Was all this necessary? Did this have to happen? Well, I guess it had to happen. So, hopefully none of you blew accounts, none of, but it seemed like, all the indicators are that the retail has been buying this dip aggressively while all the institutions are selling the dip, while selling the drawdown, right? Why? Because institutions are leveraged. They need to risk off, risk on. Well, a lot of institutions are underexposed now. Is that what's going to take us to all-time highs? Probably. Because now they're underexposed. So they are trailing. They're lagging the benchmarks badly. Not too many hedge funds are doing better than the benchmarks. And retail is beating the benchmarks. So what about it, right? What happened to smart money? As they call it, they call Wall Street smart money. Where is smart money? So retail has been right over the last 2-3 years, specifically last 2023 and 2024. They have bought every dip. This dip was a lot more than a 3-5% dip that most retail is used to. It went as deep as 20% on the S&P, 25% on the NASDAQ. Well, we're right back to back to where we were. Our all-time highs in the picture? Absolutely. Now we are. It is really difficult to look at stocks that go from, let's say, 70 to 35 and back to 60 as if nothing has happened. Maybe I'm too experienced or know too much to be able to jump in and jump out. But, I do take my stand. I take positions, and then hopefully we'll have a green year. I'm still green for the year. I'm not going to poo-poo it. I held my shit together during the, let's call it what it is. It was a crash, mini crash or whatever it was. And now, 7 months to go to finish the year, hopefully doubling or tripling the benchmark. Because if the benchmark is the S&P 500, and in last year S&P 500 was up 24 or 25%. Okay. So last year, as an individual, as a trader, I'm not talking about an investor now, as a trader, and I have a video coming out about that this week as well, talking about having trading account and an investing account. Investing is different than trading. But as a trader, if your goal is to equal the benchmarks, you shouldn't be trading, because you're taking a lot of risk and your reward should be at least a double of what the benchmark is. So last year, if the S&P 500 was up 20%, 25%, you should have gained at least 50% in your trading account. If you didn't, don't trade. There's no reason for it. So my last year results are on the channel. There's a full video on that, but full transparency. Market up 25% last year. I returned, my trading account went up 120%. Let's see what we're going to do this year. If the market goes, I don't know, if we make all-time high or equal all-time high, market's going to be back to where it started, meaning zero return, right? Well, that means if the market, assuming returns 5% this year, if your trading account is not up 15, 20%, you didn't do well. That's all I can say. Investing, again, is a different story. I would never mix investing with trading. Trading is always short-term. Investing, you're trying to take advantage of the tax situation. You want to be long-term capital gains as opposed to short-term capital gains, because trading is mostly short-term capital gains, even swing trading, day trading, whatever you're doing, scalping. Investing is you're buying and holding, and hopefully it's over a year and one day, so you can take advantage of the much lower capital gains tax rates one day if you end up selling it. I don't mix those two at all. I've done it this way over the last 20 years. You have two accounts. Trading account should be money you can afford to lose. Investing account is where you grow your wealth over long periods of time, as opposed to zero DTs and whatever you're doing. So let me take a look at the chat. Good morning, everyone. I'm gonna put the. I know it's a little sketchy today, the internet, but I'm gonna put the. I'm gonna put the StreamYard link right here. There it is. If any of you want to come on and show your face and discuss whatever you guys want to discuss, you're more than welcome to. Let's see. Vic, good morning. Techie B, hey, Techie B, how are you? Good morning. Traveler, good morning. Luis, Doug, good morning all. Hello, Mojo. Hey, Mojo, hope you're doing well. Yeah, man, my internet is a little sketchy, so I see myself freezing and going and back in. Hopefully we're not going to cut off. Yeah, I see it happening. All right, Techie B says, yeah, I froze again. Is you guys seeing that? Am I freezing? Techie B says only down a few small 1 to 2% trades per week. 512 bought Robin, 1 call contract. Okay, cool. Good for you. So let's mention that while we're at it. We have a members group if you want to support the channel that way. Well, before I say that, please put a thumbs up before you leave today or whenever you watch this, the replay. We have a really good members group that's growing on the channel. If you are interested in becoming a member, supporting the channel, having access to me for a Big Mac a month, please click join when you go to the channel, become a member. Email me, sergio@sergioavedian.com. I will send you the Telegram chat group link. That's where I post all my trades live. As soon as I do it, I post it. Again, none of this is financial or trading advice. You have to do your own due diligence. What I do is not for anyone or everyone. It's risky, but I have to take risk in order to achieve double, triple benchmark returns. Otherwise, it's not possible. So with that said, if you guys want to grab the link, come on. You're more than welcome to do so. And let's go to this. Hope you all can see that. That's my account. Full transparency here, as I said. Yeah, my internet is definitely sketchy. I can see it. Okay, here we go. All right, so what do we have? We have I have bought 3,500 shares of EVgo. I will add to this on a breakout again. Earnings came out. They were really, really good. Revenues grew by close to 50%. Stock has been left for dead. I like these patterns. I'll look at the chart in a minute. Average cost 370. It's about 380, 485. On a break to 4, above 4, I will buy some more. This could be a double over the next couple of months. I have lottery tickets in GGLL. That's 2x ETF of Google. I'm long the July, short the May, so some sort of a calendar spread going on. I am buying puts on Pony AI. It's a Chinese autonomous vehicle stock. It was a $4 number. Now we're about 20. So I'm buying the June 15 puts. This is a pair trade on the bottom. You guys will see why it's a pair trade. I'm up to 50 puts. I bought some puts. I think we're going to have a definitely pullback here. I added to my put debit spreads. That's just a hedge, pretty much, really. On the SPX, these are going out to June 20th. 56.50, 56.40 put debit spreads. I added more at 250 and 210 today, so I'm up to 20. This is the trade that's bothering me quite a bit. Why is it bothering me? It's not because I'm even on it. It's bothering me because I had a $5,000 profit on it, and I read the tea leaves correctly, but now I'm kind of starting to think that I'm not reading the tea leaves correctly when it comes to interest rates. If we're not going to go in a recession, why should the interest rates go down, right? And we have 37 trillion in debt. Out of that, almost 10 trillion is coming due this year. We need to refinance that. We can't just say we're not going to pay it. We'll have to issue new bonds, new notes, new bills, and we have to issue them at much higher rates than we currently have. And the bond market's smelling that, and all these new buyers are going to require a much better return. So I had obviously every trade starts with zero. I was short the March 2026 85 puts on TLT, which is the inverse ETF on interest rates. I'm long the March 2026 95 calls and short March 2026 110 calls. Overall, I had done this with about 275 credit. It went all the way down to even almost when TLT went up to 91. And now we're back to 86, 48, and the trade is even exactly, or down, down $100. I do not have a tendency of letting green go to red, so most likely I will close that out today with even, hopefully somewhere in that range. But this is, even I do these things, right? But then the reason I did this trade is just to hold it. I don't think the rates should go or can go any higher. But if they do, the market's in trouble. So you guys have to understand it that way, that both cannot happen at the same time. Either rates need to go down, or if rates go up, market's going to go down. So, but now that we did the tariff deal, the tariff war is over, why should the rates go down? Because Fed is saying economy is fine, unemployment is fine. In fact, inflation is coming down, oil prices are down. Why should the interest rates not go down? Well, that's because now we're back to the 37 trillion in debt. So, long story short, it started well. Literally, I was up 5K on the trade about a week and a half ago, and we'll see. But I cannot see red go to green go to red. Besides that, it's holding even with the 20 lots. I actually closed 5. I was up to 25 lots. The buying power I'm using to keep this position is over 30K, so no need for me to tie up 30K to do what? Watch paint dry? No. I'd rather put more money in EVgo and different things that I'm watching. So We'll see. We'll see. I have some orders to close the position, with profits, but we're nowhere near it. I need like 87 and a half to close this position with the profits that I had before. On Friday, I put in a small, very small, which I wish I had done a lot more, a small synthetic on TSLL, which is the 2X ETF of Tesla. Tesla, since the earnings came out, has been kind of on a tear, breaking out. Technically, if I knew, just looking at the chart, I did this. I didn't do it because it's Tesla. If I, one of the reasons actually I probably only did 5 lots. I could only do 5 lots is because it's Tesla. If it was anything else, I'd probably do a full position on it, but I may add some to it. It's just tiny little synthetic, nothing major. Going out to May 30th on TSLL. Shorted, I have a profit, I have like $300 profit, nothing important. Because Tesla is up big today and TSLL is up in turn, obviously. So I shorted the May 30th $10 puts, and with that money, used the credit. In fact, did the whole position with a 25-cent credit to the put side. Sold the puts, bought the calls. That's called a synthetic. That's owning the stock without owning the stock. Obviously, it's not exactly like owning the stock. That's why it's called a synthetic. So I sold the puts at 61, 62 cents. They're down to 26 cents. Bought the calls about 38 and a half cents. They're about 60 cents. So, nothing major really. Now we have a credit on the call side, obviously. And last but not least, this is the other side of the pair trade. We ride, a lot of good news on it. Earnings are coming out, but earnings are unimportant on these things. We ride is just like Pony AI, another Chinese autonomous vehicle company. That's going to be the future, as we know. NVIDIA has an investment in it. Uber just invested $100 million in it, and bought 3,500 shares, cost us $750. Stock is 10. So I'm short Pony AI, long WRD. That's the pairs trade. Pony AI was 4, now it's 20. We Ride was 6, now it's 10. Either Pony AI is too expensive, is going to come down, or We Ride is going to catch up. That's called a pairs trade. That's the way I look at it. At the same time, I'm short. I was short more. I was short actually June 5 puts, but when the stock went up, they disappeared almost. So took the profit, rolled them up. I want to sell more puts, but they're disappearing now. I'm short 5 of the June 7.5 puts. I also have cover calls at the 10 and 12.5 level. So, if I get called away at 10 and 12.5, great. No problem. You can have it. These are all going out to June 20th. So I'm long the stock, short the put, short the calls. It's called a covered strangle, basically. And, we just hold on. And if We Ride goes up, great. If I get called away, I'm at the money with one option. I have the 10s and 12.5 calls. The way I look at this is this. If I get called away, it's about a 50% return for until June 20th. That's the way it looks. I'm already up 30% on the stock. So I bought them at 7.5. The stock is 10. Well, now, but then the June, obviously 10s and 12.5s are $2 on the 10s. A lot of meat on the bone, and 12.5s are 1.5 bids. So, 12.5, I sold the 12.5s at 40 cents, and I sold the 10s at $1.10. So factoring in the put side as well, the way it looks is my cost basis on the stock is 7.5. If I get called away, 10 plus the premium, 12.5 plus the premium. Average sale cost is going to be about 12, 11.5, 12, 7.5, 11.5. I'm not even counting the put side. That's about 50% if I get called away. If I don't get called away, my cost basis is going to go down drastically, and I'm going to do it again for next month, and I'm going to do it again. I'm not going to sell the shares. I'm owning the shares. So, yeah, that's where we are on the account. Still green, about 30% for the year. I was up about 30% at the end of January. All this up and down, I didn't benefit from it. I'm kind of pissed off about it, actually, but it is what it is. Let's look at some charts, and then I'll answer questions. If any of you want to come on, you can sure come on. Where are we? So this is SPY. I was looking at some long-term monthly charts yesterday. So this is where we are. Pretty strong. 581. This is SPX. SPX gapped up today, pretty strong. I mean, from the low to here, we're up 20, almost 18%. And from the top, 61.50 to 48.50, it was down 21, 22%. So, yeah, above the 200 now, above the 50, above that. We have a little uptrend here. I don't like drawing too many lines. Where is the next resistance level? Honestly, there isn't that much until the lows that we took out, which is about 5,900, 5,920. And then after that, 6,150. So basically, April 2nd was here, this bar right here. Yep. And then we gap down, gap down, gap down. So we are above, clearly above the April 2nd level now. So this is April 2nd, right here, which was on April 2nd, we closed at 56.58, 56.60 level. Today we're at 58.44. So not only we're back to there, we're way above that. We're about 3-4% above that. Okay. Yeah, I mean, you know, I'll see the market probably consolidating, maybe a little pullback to this uptrend, and then go again. There's no doubt that's what it looks like. Same thing as with triple Q. Same thing with triple Q right there. Same chart basically. Coming into resistance now. Actually, triple Q is outperforming actually SPX. 510 seems like the next resistance, and then 540 the next one. This is TLT. Yeah, I mean, TLT is like, this was when I put the trade on right about here. In a couple of weeks, we were up here at 90. That's when I had the 5K gain. Well, we don't have that now. You know, a lot of people said, why don't you take the gains? Well, I did the March 2026 because I'm thinking we're going to 110 minimum. Rates are going to go down because we're going to go in a recession. We're going to go in a slowdown. And it didn't happen. So we'll see. Gold is pulling back as well today. Double top looks like for sure. I will be a buyer of gold though. I'm not shy. About 2,900, 2,800, 2,900. But I will not buy GLD. I will trade NUGT, which is the 2X ETF of the daily gold miners. If that outperforms and underperforms. So that thing was 81. We're down to 61. Hopefully maybe a pullback to, I don't know, 200 EMA, about 52. I'll be all over that. You know, Max 7 is doing its thing. Most of them are looking good now, as bad as they looked a couple of weeks ago. You know, Apple is still a little bit of a resistance up here, about 215 level. NVIDIA doing well. Kind of breaking out now. The last bit of resistance is about right where it's at. If not, then yeah, we're gone. Tesla, definite breakout. No ifs and buts about it. It broke out of that downtrend, consolidated for about a week, and then broke out again. So first resistance is here, about 322, 325. Next one is 350, 360. Yes, stock is expensive. Yes, it's this. Yes, it's that. Don't argue with charts. I mean, look at the charts and you move on. No feelings attached. And Amazon clearly gap up, benefiting from the tariff agreement. Microsoft earnings were absolutely bonkers on that. I mean, this stock is moving like pork bellies, okay? This is a $3 trillion company. That's how volatile the market's been. Stock was 450, sold off to 350, 344. Now we're back to 450 again in it right here. So, I mean, it's unreal what's going on right here. So this is, yeah, end of January. I mean, wow. Okay. And Meta earnings were extremely strong. And this is Meta. Again, 740 high, double bottom at 470, and we're at 640. Netflix is its own world. Good earnings, bad earnings, that stock always goes up. That came down and kissed or tagged the 200 EMA. New all-time high, 1164. Any pullback should be bought on Netflix to probably 1085, 1075 level, the old highs. There's a lot of stocks that are doing their thing. Hood, one of my favorites. Robinhood. Look at that thing, right? 67 down to 30. Back up to 60 almost. Hims and hers. This stock is wild. Blows my mind. Goes to 73 down to 25. I mean, you got to trade. You know, stocks have to be bought and sold, period. I don't care who says what, especially stocks like this. You know, now 25 to 60 in about 10 days. There you go. Good trading situations, really, to be honest with you. Soxel, we traded those in the members group as well as in my long-term account. Let's go through those. I bought Kava at about 82, 83. Got lucky. I bought Google. Although Google had some bad news, but I think it's the cheapest Max 7 stock out there. Bought about 143 range on Google. Got up to 165. That one big nasty down day, and then it's kind of trying to recover. I think it's the cheapest of the Max 7s. I have Unity Software in my long-term investment account. I have Nike in my long-term investment account. Finally, after 3 years, I bought Nike about 53, 55 range. It's okay. Yeah, and I had Robin, ROBN, which is 2x ETF of, I sold that. I sold that with a double almost. I mean, even in an investment account, if you give me a double, I mean, I'm going to sell it. So those are the long-term positions in that account. What else? Well, the ones I'm in now. Let's take a look at that now. EVgo. I like these patterns. Go sideways, sideways, sideways. Base, base, base. Catalyst, earnings, breakout, above. It's trying to stay here above it. Moving averages are going to catch up. MACD is going above 0. Big gap up here, about 6 range. So this could be a nice trade. 7 resistance, which will be a double from here. So I'll take that. Stock had big moves like that before. So I like the way that it's consolidating after the big move. It's not giving it up. And I will add to it. Here's Pony that I'm shorting. That's Pony right there. Look at that thing. This is $4.11. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. This is the 15th trading day. 4 to 20. How do you like them apples? Right? And then this is part of the pair trade. I'm short this. I'm long WRD. They both do the same thing. And here's WRD. Looks pretty similar. I mean, I have covered calls. Hopefully it will not run to 20. And then I'll watch it. But again, I did the trade that I did. I'm not going to be concerned with it. And TSLL is the other position. Small synthetic. It follows Tesla, obviously. So, you know, compared to Pony to those. So Pony is about a $7 billion market cap now after it went from 4 to 20. Another reason I'm shorting Pony is because they have share lockup coming up on the 23rd of May. Millions of shares. These are not small companies. They have 0 profits, very little revenue, by the way. And they have share lockup coming up on May 23rd. On WRD, We Ride, share lockup has been done, and that's why it's kind of dragging its feet a little bit for the fact that share lockup ended at April 23rd, and that's why we have all this volume. So whatever insiders couldn't sell, now they can sell. This is when NVIDIA got involved overnight. Stock went from, actually this thing came public at 15, was going sideways. NVIDIA said, oh yeah, we like the company, we're going to invest. That's when it went in one day from 15 to 44 and back to earth. And I thought at $6 is a pretty good risk reward. And I still think it's cheap compared to Pony. So that's what we're doing. That's where we are. And you know, I'll add to rewrite some more, sell some more calls, and sell some more puts. I'll add to EVGO. If it breaks 4, I'll definitely add, especially with good volume. If it does that, I'm going to be all over it. Yeah, that's where we are. The put debit spreads, I'm down, I don't know, about 1100. No big deal. That's a little bit of a hedge for me. Buying the puts on Pony AI, some of you may say, why are you doing that? Stock is on an uptrend. You know, parabolics don't end well. And again, I look at it as just another trade. You know, that's why I said don't do what I do. It's not healthy for you. But I have my reasons of do what I do. And that's it. Let's go to the chat. Let's see if anybody wants to come on. No? Nobody? Doug, the income to housing ratios are way out of whack. Yeah, probably so. Yeah. Okay. Nobody wants to come on? Anybody want to come on? Here's the invite. Here is the invite. Where's the invite? Right here. StreamYard. You guys want to come on? Grab it. Come on. I'll spend some time with you guys. All right. Doug says, what do you think about... Yeah. Well, it was a sleeper when it was $3. Archer, and there's another one. They have a competitor. I forgot the name of the company though. GEV. Okay. You know, you guys can ask me during the members live, by the way. Let's take a look. Yeah, Archer, and there was another one. These EV toll companies. What was the other one? Shit, I forgot the name of the company. Archer, and what's the other one? Anybody know? Let's take a look. Let's find it. Archer. Aviation Group. Joby, that's right. Yes, thank you, Avina. Let's take a look at both. And let's look at GEV. Let's go. Let's look at GEV first. Yeah, there you go. Look at that ride. Expensive stock too. Gap down. This must be earnings. Yep. Bad earnings probably. Nothing looked good until it kind of double bottomed itself here. And then, you know, I mean, I'm not a huge, you know, this earnings report was okay, I guess. There are a lot of very similar looking stocks. I mean, it's approaching, you know, the gap. It's also approaching all-time highs at 450. You know, if you owned it, if you did the round tripper with it, good luck. I would sell some cover calls probably on it. Archer, ARCH, never mind. ACHR? What's Archer? ACHR. Yeah, consolidating. It looks like SoFi actually. Here's SoFi. Looks pretty similar to SoFi, doesn't it? Almost identical. ACHR. I mean, look, this company it's a big company. They have no earnings. They have no revenue. You know, risky, really. But, I mean, this is probably a perfect, you know, sell the puts kind of a situation. Joby, let's see how that's done. Same, I mean, the exact same looking chart almost. Joby is a little, hasn't gone up as much as Archer. I mean, literally, they look identical. You know, they're both big companies. They're multi-billion-dollar companies for something. I mean, it's a long shot, right? I wouldn't say it's like a biotech stock, but it's up there. AppLovin was another one. You know, that I think this one is very tradable at the moment. So 525 high, pulls back all the way down to 200. Now we're up to 350 into resistance. If earnings were pretty good actually. If we mess around here, this is going to go back high. So AppLovin I will definitely trade that. Let's look at my list. Quantum computing stocks are kind of moving again. You know, I like these types of patterns, even if it's a quantum computing stock, even if they don't have anything going for them, revenue or profit wise. I like those. These are the types of stocks I like. You guys see what I'm saying? Base, good catalyst, breakout, jump on it, stay with it as long as you can. You know, let's take a look at a couple more. AMD. Now we have something on AMD. Now I can comfortably sell some puts on AMD. I wouldn't buy the shares yet. If I get assigned, I'll be okay with it. This looks like a found bottom at 76. You know, I don't mind selling some 90 puts or maybe 95 puts. You know, not that much money, but it's okay. ASTS I like. I like these types of patterns, sideways before the big breakout. Bloom Energy I like. Obviously, Chinese stocks are doing well. Alibaba. Had nice. These are all nice trading stocks, man. You know, that's why I'm looking at them and I'm going like, why am I not in here? Billy. We traded this. Back to 20. JD. These are the Chinese names. Baidu. I mean, there's room on these stocks, and Yin is the 2x ETF if you don't want to deal with them individually. There's room in these things. So let's see. Oh, how do we not talk about Bitcoin? What am I doing? This is IBIT. This is the 2x. This is BlackRock ETF. Bitcoin back to 105, right? Bitcoin, I think, decoupled now. You know, on that sell-off that we had, Bitcoin did not sell off. That was a very, very interesting and good sign for Bitcoin holders such as myself. This is IBIT. This is BITX, 2x ETF of Bitcoin. That's, you guys see the underperformance, right? The slippage. But then the winner, obviously, is MicroStrategy or Strategy, although it's kind of reversing today. But you guys have to understand, last time Bitcoin was at 105, MicroStrategy was 543. This time, 400, right? So slippage is something you guys need to pay attention to, especially when it comes to the ETFs of these things. MSTU is 2x ETF. Okay, so let's take a look at it. When MSTR was 540, okay, MSTU was 31.5. Okay, so now MSTR is at 410, let's say. Okay, so 540 to 410 is about 30% pullback from the high, right? Where's MSTU? Not even 10. You guys understand the slippage on these 2x ETFs. So when you do trade these are not to buy and hold. Yes, you can buy and hold for a week or 2 weeks max or something like that. This is for daily return. If you had bought this at 31.5, MicroStrategy has to be 1,000 for you to break even on this thing. So do not buy these because they're the 2x ETFs. If there's a short-term move coming, yeah, by all means. But without that, I wouldn't mess with it. And I'm looking at my list. Tamara probably had a nice move. Yeah, I mean, you know, this is another ETF related situation. Oh, one of my little favorites, KULR, Cooler Technology. Do we throw some money on that thing? Yeah, earnings are coming out. That's a crazy ass mover, and they bought more Bitcoin. You know, for their treasury. I think I gone from $1 to $6 almost, and then it consolidating, holding at a 20. Now, that may be interesting actually. $1.52, no problem. I'll probably buy some of that. Lyft outperforming Uber. There's Uber. They're both doing well. I mean, Uber's making a new high today. What am I saying? Up 4, up 5%. But Lyft has been outperforming lately. Meta we looked at. Microsoft we looked at. Micron. Gap up today with SOX or SOXX is the semiconductor index. Wild moves, man. These are indexes that are moving 30-40%. So wild moves. What else? I think Reddit is something I need to pay attention to. Yeah, I like Reddit actually. It's just kind of a little bit of a head and shoulder here. Stock high 230, pull back to 80. Consolidating here with the tops about 125. You guys see the head and shoulders here? There's the left shoulder. There's the head, building the right shoulder, neckline 120. Put this on your watch list, please. RDDT is the symbol. Reddit. What else is happening today? Shopify. SoundHound. Wow, up $2, 22%. What happened there? There's another pattern that I like right here. Goes down, dies, goes sideways, breakout, good volume, going above MACD. SoundHound. Is there any news on that today? Let's take a look. Let's take a look. SoundHound. Shares of software stocks. No news. When is the earnings? When is the earnings on that? Oh. Actually, earnings did come out. That's interesting. I may put on a synthetic on that. That's a fast mover. If you catch it right. Last time you guys saw what happened there, right? 6 to 25 in about a month. That's a fast mover. TEM. Tempest AI. Are they going to move all the AI stocks now? Probably. Trade desk. Another one. Look at this. How do you deal with this? Look at that thing. Round tripper. 140 to 40. Back to 80. Stocks are doubling, going down 80%, doubling. Unreal. Even fast for me. Upstart had not bad earnings, okay earnings, when they punished it. But then again, this one, 96 to 30. How do you deal with that? I mean, how I don't yeah, I don't know. Wise key. There was a crazy big move. There's another one of those. I wouldn't mess with this one though. But look at that one. Okay, these are all the patterns. I'm just they die, they go sideways, and then they break out. And then once they break out, you got to be on it. Zim shipping, Zim integrated. Obviously, the trade news was good. 30 to 11, back to Xena. Oh, there it is. There's one. You guys want a cheap one that could really move. Xenatech. They do security for quantum computing companies. Cybersecurity, I mean. There you go. What did we buy? Oh, we bought more puts on Pony. Okay, cool. Cool. Sounds good to me. We bought more puts at 225. Okay. You know, people go like, why are you buying puts? I'm like, because it's in parabolic, and parabolics don't end well. They will end with tears, and tears ain't going to be mine. These are June 15 put. Stock is 20. I just bought 10 more at 225. I can sell weekly call puts against it. I can do a whole bunch of things against it. So we'll see where it happens. We'll see how it goes. The only thing I may close today is my TLT today. Actually, like back to a little Xena. I got to keep my eye on this. Put a limit or put an alert on this about, let's see, $3 range, 270 range. And you're going to say, why aren't you buying it here? Good question. Because it could go to $1.50. You guys do realize things can go down like 50% indefinitely and not hit zero, right? Yeah. So, but I'll definitely keep an eye on it. When it starts moving, I'll move it. Joby, we looked at. Yep. Yin is 3x. Yes, correct. Jason says MTPLF. What is MTPLF? MSTR kind of stock. Okay, let's take a look at that too. And then we'll say goodbye. Nobody wants to come on. MTPLF. Okay. A lot of letters. MTPLF. Meta planet. Foreign. Yeah, there you go. Wild. Well, not MSTU type of thing. This is different. MSTU is going off of something. This looks like it's on. Yeah, this is way too thin for me. I don't know. I mean, this isn't a perfect algo HFT trading stock. You know, it goes 1.5. The next day it goes to 4. The next day it comes down to 2. Like, yeah, even for me, it's too much. Yeah, these are like, I don't know. I don't want to badmouth them. You may own it. These are trash companies that just manipulated stocks. Really, just I can't deal with those. I have enough trouble dealing with the regular shit. All right. Bitcoin definitely holding, yeah. Bitcoin, where is Bitcoin? 104, 105? I bought more this morning. Every Monday, $100 for the whole year so far. Not only that, but I own it from, I own it, from 6 years ago. Give me 1 minute. Okay. So that's it. What's my cost basis? Oh, on Bitcoin, it's whatever it was 6 years ago, man. But now this year I've been buying between every Monday, so between 75 and now today 104 and change, $100 every Monday. Cost basis is low. Well, actually, Bitcoin is 102. Actually, it's down today. Huh. So I paid, I think, 104 and change this morning. Anyway, so that's it. That's where we are. Hope you all have a good week. I'll see the members Wednesday. Members get that, by the way. Members get a live stream every Wednesday between 3 and 5 p.m. Pacific. I'll see you guys. Thoughts on Uber breaking out. Yeah. Well, I wouldn't buy it here. I think Uber is expensive. Lyft is a little better. Both companies, I wouldn't buy here. I would wait for a pullback on Uber. I know Uber really well, so technically, I can't look at technically that way, honestly. It's like in the trading range, 60 to 85 kind of a thing. Obviously, there's going to AVs and things like that, but I would not buy it here. There are so many different things you can buy when this bull market resumes. Now that it has resumed, I don't think there is no need to do that. Yeah. With that said, stay healthy. See the members on Wednesday. Please put a thumbs up. On the way out, please share. What else? And see you all on Friday for trading or Power Hour. So Mondays, 10 a.m. Pacific, 1 p.m. Eastern, trading with Sergio. On Fridays, Power Hour, and 10 a.m. Pacific, 1 p.m. Eastern. And on Wednesdays, we have the live stream with the members. So that's where we are. I say, have a great week. Make some money. We'll see the members on Wednesday, and we'll see you all on Friday.